What is the better and more profitable way of making money? Is it to buy the underlying asset or to trade the asset? Whether it's Amazon stock, whether it's cryptocurrency like Ethereum, whether it's commodities, what is the better option? And how can we reduce our risk and make more money? Well, that's what we're going to dive into in today's video. And at the end, we're going to do a summary comparing the two. If you don't know me by now, my name is Jagir. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro, featured in the best-selling book, High Probability Trading Strategies, back in 2007, where I mainly used to focus on Forex, but now focus on crypto and some other markets like the stock market. So if you find value from today, give me a like, really appreciate it, and feel free to share this because we're going to dive deep into some numbers because I've got a degree in mathematics. I'm going to break some numbers down. So reducing risk, I'm going to show you can reduce your risk by 5 times and make 2 times the profit, right? And if you can do that, then you're going to increase the probability of you winning, but each has pros and cons. Buying the asset and trading the asset, and you want to be aware of the two. And the example we're going to use is with a $10,000 account. Now your starting account size might be bigger, so just change the numbers, or it might be smaller, but it gives us an indicative feel of what's going to be the pros and cons and the better option for you. And by the way, if you haven't already, I've got my new free masterclass, The 4 Secrets You Must Know to Make Money Trading the Markets. It's going to take your trading to the next level. Whether you're buying the underlying asset or trading, the information shows you how to read the market and be 2 steps ahead. By the way, that's in the description below. So we're going to use Ethereum as our example. And it doesn't matter if it's Amazon stock, if it's gold, if it's Forex, if it's crypto, it doesn't matter. What we're really going to focus on is buying the asset versus trading the asset. So I've set a buy price and a sell price. And it's basically these two numbers over here. Just using this as an example, buying over here at $1,094 with Ethereum and selling up here. And if we're buying the underlying asset, well, if we had $10,000, it would be reasonable that we will risk 10% or allocate 10% of our portfolio towards one asset class. And that's what we're using in this example. You could go higher, it could go lower, but 10% is pretty reasonable. So you have 10 in your portfolio. So that means we're risking $1,000 or we're spending $1,000. So if we bought $1,000 worth of Ethereum and the price was $1,094, it means we'll get 0.914 of the underlying asset. And we own that asset in this example. And then selling that asset, in terms of the price increases, it appreciates in value, and then we sell it higher. And, you know, if you watch my stuff, I do something called Elliott Wave Theory, 1, 2, 3, 4, 5. Let's just say we saw this pattern, which we actually did. You would have seen it in my YouTube content. And we said, all right, we looks like we're making a high, let's sell. How much profit would we make? And what would be the difference if we traded it? And there is a difference, and I'm going to go into that into the next example. So if we sold our 0.9 or 140 Ethereum at the higher price of $1,948, we would have sold it for $1,780. Now, given that we spent $1,000, our total portfolio in this example would now be $10,780. So that means the profit is, or the net profit is $780, and that's 7.8% of 10,000, right? Considering that we risked 10% at the beginning, right? So here's a summary shot on buying the underlying asset, right? And this is important. Now, I know some people love numbers, some people hate numbers, but the numbers are great because it cuts through the noise and it just gives us very objective information so we can do a direct comparison based on reality and based on facts. So now let's go to a trading example. Same chart, same buying price, same selling price, but there's a couple of nuances with trading. Now, trading, you can long the market, which means making money on the way up, but you can also short the market. But long in the market just means buying, right? But there is a difference. So again, we're going to use the same price, buying at $1,094 and selling at the higher price. So we buy low, sell high. We got great. But with trading, you can use something called a stop loss. This allows you to control your risk. In other words, what you're saying to the market, and your platform would allow you to do this, or your brokerage, if we get entered into the trade, we're saying, right, we want to put in a stop loss over here. So if the price goes against us, we're going to be stopped out of the trade and we take a loss. And that's important. And we'll cover that more in the summary as well as we get there. So the stop loss is set at that low. But the most important part is that we're risking 2%. That's the key part. So 10,000 account, same example, but we're risking 2%. 2% of 10,000 is $200. But what would this look like if the same trade went up to 1,948? Well, first of all, it allows us to control more Ethereum, right? 2.27. So you might have heard of leverage, but we're controlling our 2% risk, but we're controlling more Ethereum. So in the first example, we managed to buy 0.914 Ethereum for $1,000. But in this example, using a stop loss, we're controlling, and the word is controlling, we're not owning it because we're buying a contract, 2.27 Ethereum. But this is where it gets very interesting. The price difference between the buy and the stop loss is $88. And this is the formula of why it allows us to control more Ethereum. But the most important part, what we're covering today, is what is the profit? Well, if we manage to leverage the trade, if we bought 2.27 Ethereum at the low and then sold that at the 1,948, we'll actually make gross 11,948. In other words, the profit is $1,948. That's 19.48% of your whole account size. Keeping in mind that we started with a $10,000 account. You seen the difference between the two? Which one's looking better? Well, mathematically, obviously, this is looking better because we've risked less and we've made more, right? And that's a part of the art and the science of this. So now let's just do the summary of the two. Buying versus trading. And when I'm looking at the markets, I'm looking to make money, right? Let's call a spade a spade. We're looking to make maximum profit, minimum risk, minimum downside. We're here to make money. So on the $10,000 example, what is the profit difference in this example? Well, buying the underlying asset is $780 profit, 7.8%. Trading the underlying asset is $1,948, right? So straight up, profit, trading is better. But there are pros and cons, and we're going to cover some of those pros and cons because it's important to know the difference. What was the risk? Well, the risk was we risked $1,000 on the buying side, where we was 10% of our portfolio. Whereas with the trading, we risked 2%, which is $200, right? So that's really important. So we made more than double, but we risked 5 times less, right? And that's the power of trading. However, when you buy the underlying asset, you own the asset. So you mean if you're buying Ethereum, you own Ethereum, which means you can do things with it in decentralized finance. You can stake it. You can loan against it. You can take a loan out against your Ethereum. You could do what you want with your Ethereum. You own the underlying asset, which also means if the price goes down short term and then goes up, you can hodl it for longer, right? So you own the asset. And that is a major pro of buying. With trading, the pro of trading is you control the risk. You're saying, I'm willing to lose 2% to find out if I'm right. A higher potential return on investment. And the biggest advantage of trading, well, one of them, is you can short the market. In other words, if you see a pattern position, you might have seen my YouTube content not that long ago, where we shorted Ethereum, making money on the way down. And trading allows you to do that. But what are the cons? Well, the biggest con with buying the underlying asset is less return on investment in terms of the potential for the amount of time and the amount of risk, right? And that's what's one of the biggest things. But the cons when it comes to trading is you don't own the asset. You're buying a contract, either futures trading or contract for differences, which is CFDs, right? So you're buying the contract and you can get stopped out, meaning we're risking 2%, but if the market moves in our direction and then hits our stop loss price, it means we lose our $200 and we don't own anything, right? And there is a nuance between the two. So how did you find today? If you like today's content, like, subscribe, hit the bell notification. What's your preference, buying or trading? Check out my 4 secrets. The 4 secrets you must know to make money trading the markets. The link is in the description. I'll just take you to the next level because we really want to stack the odds in our favor. Whether you're trading or buying, the principles apply because you can read the markets like a pro. Now, I want to read a quote from my book. Well, I normally read a quote from my book, but actually, the one I want you to really say is actually from, I can't remember who said this, but he said the following. Oh, I do know. I think it was the Saudi prince. I think it was the Saudi prince or one of those guys. He said, everything is difficult before it is easy, right? Everything. Whether you're driving a car, well, if you remember the first time you drove a car, I know the first time I drove it was pretty difficult. Like there was a lot of moving parts. There's the clutch, there's the accelerator, there's indicators, there's the seatbelt, there's the mirrors, there's a lot of things going on. But then it becomes effortless over time. So everything is difficult before it's easy. So today we covered a lot of numbers. So I would encourage you to go over the numbers again to really understand the nuances between buying the underlying asset and trading long, short, and there are pros and cons. And you want to take your risk tolerance into consideration, your time availability into consideration, and your skill level into consideration, and what you're looking to do short term and long term. And some will choose trading and some will choose buying the underlying asset. And your job is to decide what is best for you to make money from trading or buying and selling from the markets. Like, subscribe, hit the bell notification. I will see you very soon. Check out the masterclass. Let me know how you find it. I think you're going to get a lot of value from it.